Hey everybody, and welcome to today's video. Today we're going to be going through Volta's third quarter earnings report that they just put out yesterday as of the time of recording. And this was the first trading day for Volta after these earnings were out, and we can see that the stock has been just totally destroyed. And it's not like all of the EV charging stocks fell today. This was very specific to Volta. As you can see here, ChargePoint today was up 2.8%, EVgo was up 0.7%. And Volta was down almost 26% here. So this was obviously related to Volta's earnings that they had just posted. Now I'm going to start off going through the investor presentation that Volta put out, and then we're going to take a look at the actual financials and the 10Q that they filed, and then I'm going to go ahead and share my thoughts on all of this. So starting off the slide presentation, there is kind of a summary of the things that Volta has been doing that has been part of their restructuring. They've announced most of these things pretty much already in past articles that they've put out. And the first point here is that they've reduced their full-time employees in the US by 54%, which has led them to reduce their cash run rate of selling general and administrative expenses by 43%. They've also completed additional steps to reduce the number of the amount of consultants and contract employees that have been used. This, they say, was mostly in their finance and accounting department. They also say that they're exploring outsourcing opportunities with select US-based contractors and suppliers to reduce cost of charger installations. And they did go into more detail on this point in the earnings call as well. They said that they're working with site hosts for chargers that are in construction to try and see if they would be willing to help out pay for the costs of that construction and be able to get that charger up and operational. So it'll be interesting to see how that ends up going, having the site host pay for the construction, whereas previously Volta has always paid for the construction essentially. And then they say that they're continuing to streamline the organization and prioritize resources towards revenue-driving initiatives. They have a section here about federal funds. There's nothing very new there. And then they have a section on their advertising business. And they say that the network has surpassed 5,700 screens and 1 billion monthly media impressions. They've offered value to an increasingly diversified roster of clients. And AdExchanger awarded Volta the best commerce media technology for its campaign with Coca-Cola, demonstrating the power of the Volta Media Network to drive measurable sales for leading advertisers. On this slide, we can see Volta's network as it stands today. We can see a breakdown of their total installed base. So this is essentially the amount of screens, stalls, and sites that are currently in operation. Then they have their deployment pipeline, which essentially includes screens, stalls, and sites that are currently not operational yet, but they are working on building out that equipment and installing it, essentially. And then there's also the technical evaluation stage, which comes even before the deployment pipeline. Now I'd like to point out here that during all of quarter 3, Volta has only added 173 new charging stalls to their network, which isn't a lot compared to the amount they had previously been installing per quarter before they started to really run out of money. We've got a slide here on the advertising business, which again hasn't been very affected by Volta running out of money. Advertisers are still willing to advertise on Volta's screens, so that's good. Volta's still generating revenue from advertising. They've had a number of new advertisers come in and start advertising with Volta during the third quarter, and they've also had a number of repeat customers as well. Now over here we can see Volta's total revenue, media revenue, and their total installed base of stalls broken down by year-over-year growth, and then below that is the quarter-over-quarter growth. So starting off here with the year-over-year growth, this growth is going to be a lot higher than quarter-over-quarter because Volta has only recently began to run out of funding. So if we see here, total revenue year-over-year grew 69%, media revenue grew 66%, and the total amount of chargers on their network grew by 45% year-over-year. Now moving down to quarter over quarter, it's a totally different story. We can see that between quarter 2 this year and quarter 3, Volta's total revenue declined by 6%. Media revenue grew by 9%, which isn't bad compared to the total charger install base only growing by 6%. So essentially what this means is that Volta has managed to increase the media revenue per stall on a quarter-over-quarter basis. But of course, this total installed base growth of only 6% quarter over quarter is not good at all, and this is probably going to end up being even lower in quarter 4. Now here Volta has given us some key financial highlights. There's a number of things that are excluded from this, and we're going to go over those shortly. But we can see they've kind of highlighted this number here, their charging stations and digital media screens. This is a pretty specific line on in their financials, but this was something that grew because they did grow their network by 6% quarter over quarter. So they managed to grow the value of operational charging stations, essentially. Construction in progress has also grown quite substantially here. Currently they have almost $96 million in construction in progress, so that's just locked up in this construction phase. And without really additional funding, Volta isn't really able to complete these projects, so they're just kind of sitting here locked up on this construction in progress line, essentially, right now. Total revenue, as we discussed earlier, has decreased quarter over quarter. This is nothing too surprising. Volta previously was guiding for between $17 and $18 million, I believe, as of quarter 2. And then later on in the announcement of their organizational restructuring, they revised their guidance for the third quarter to be between $13.5 and $14.5 million. So it's good to see this come in on the top end of that revised guidance range, but obviously it's still much lower than what the expectations were earlier in the year. And then after their expenses, Volta had an operating loss of $40.4 million and a net loss of $42.5 million. Now looking at the income statement, we can see Volta's revenues broken down into their 3 major categories. Service revenue is, of course, pretty much the main category here. This includes media and project development revenues, so this is pretty much their main revenue stream right there. Product revenue has increased since quarter 2, which I believe is due to Volta now having some of their site hosts covering the cost of construction, as I mentioned earlier. And then other revenue has also declined since quarter 2, and this line pretty much consists of their Predict EV software. Service costs have declined on a quarter over quarter basis, which is in line with their service revenue also declining. And product costs have increased quarter over quarter, which is in line with their product revenue increasing. Selling, general, and administrative expenses is something that Volta has been very focused on this year. This is where those full-time employee reductions come in. We can see that back here in quarter 2, they had almost $44 million of SG&A expenses, and now here in quarter 3, after some further reductions, they're down to $40 million. Now these SG&A expenses in quarter 3 are less than where they were in quarter 2, but if you take a look back here at the quarter 1 income statement, we can see those SG&A expenses came in at $56 million, and then here in quarter 2 they came in at $44 million, and now in quarter 3 they're at $40 million. So it looks like their SG&A expenses are starting to level out around this $40 million mark. So it doesn't seem like these SG&A expenses are going to go too much lower than where they're at right now. At least Volta doesn't seem to want them to go too much lower. And then subtracting depreciation and amortization and other operating expenses, Volta's total operating expenses came in at almost $55 million, which was less than what it was in quarter 2, mostly led, of course, by those service costs declining and the SG&A expenses declining. So all of this gave Volta an operating loss of $40.6 million and a net loss of $42.5 million. Now here's what we've all been waiting for. Volta's total amount of cash that they had as of the end of quarter 3 was only $15.6 million, which is obviously way lower than where it was at in quarter 2. And most of that, went to all of these expenses that they had. So there was all of those operating expenses, and those totaled almost $55 million. And then they were also spending on building out new property and equipment, so basically new charging station hardware. But again, a lot of that has ended up locked up in the construction phase, and they aren't really able to do anything with that right now unless they get some more funding coming in. As they repeated many times during their earnings call, Volta's future is extremely dependent on being able to get a capital raise done, whether that's through taking on new debt or share dilution. And with the stock now at a valuation of only $122 million, it doesn't seem like there's a lot for Volta to tap into here as far as share dilution goes. They said during the earnings call that they're having talks with a number of potential investors, but all of these investors have a different opinion on what Volta should be doing at this point. For example, some of them want Volta to issue new shares, whereas some others don't want them to do that. So it sounds like Volta isn't very sure about what to do at this point, because all of these investors that they're in talks with have a very different idea of what Volta should be doing. Now, of course, the amount of cash that Volta has here is extremely important to Volta here in the coming months and even weeks. And I honestly wouldn't be too surprised if they've pretty much entirely ran out of cash by this point here in mid-November. We've got to remember that Volta had an operating loss of $40.5 million here in quarter 3. And if you divided that by 3 months, then that's $13.5 million that they're spending each month there. And obviously, if they're spending $13.5 million per month, it would seem like Volta would probably be pretty much out of cash by this point in time. And obviously, without any cash, they won't be able to pay off any of their employees. They'll need to continue laying off more of their workforce. And, it's just going to get even worse for Volta from here on out if they don't end up getting a capital raise done sometime very, very soon. I'm not a shareholder of Volta, and I don't plan on buying any. I have a number of other videos on Volta and other EV charging stocks, so be sure to check those out, and I'll see all of you in the next video.